Hi, good evening, everyone, and welcome to the 60th episode of Let's Talk About Market. So, today, if we see the Nifty Index did manage to bounce back early in the morning, but after that, we had seen some correction. And actually, if we see the closing, it is below the 40-day exponential average. So, does it create a problem? Are we headed into a deeper correction or what? That is what we'll discuss about. See, largely, not much has changed from what we spoke yesterday. I think next 1 or 2 days will be very critical to watch. What happens. Maybe that might set the tone for the coming days. So let me quickly share my screen and please, if someone can, okay, just give me a minute. Let me pause all the notifications. Yeah, sorry. So I'm sharing my screen. Someone can please, if they can confirm if they are able to see my screen properly and if they are able to hear me. Someone can please confirm in the chat box. I'm not sure how many old guys are also there, but I've made this blunder a couple of times. So just need your confirmation if you all are able to hear me properly. Thanks, Sudhir, for the confirmation. So let me jump to the Nifty chart. So in the morning, the Nifty index did head higher, and frankly, I thought that maybe the correction is done and we could be headed higher. But by the second half of the trading session, we saw a correction. But one thing that we had also definitely mentioned is that look at the averages. I think these will be important levels to break on the upside. Once that happens, then possibly the lower end of the channel will be the next level then to watch out for. Sorry, the upper end of the channel, which is now moved to say somewhere around 26,120. So these are the two critical levels on the upside that needs to be break. One is the averages and the other one is the channel. Once that happens, that's where we can probably say that maybe the correction is coming to an end and the up move could be starting. That is because right now there is a lot of divergence which is prevailing between the indices. Like small and mid caps are correcting. Even small micro cap, mid caps, they have seen correction, but Nifty so far is very resilient. So the whole question is that will Nifty index actually be the lead indicator in showing strength, and then everything else will follow, or is it the other way around that all other index have fallen, now it is last Nifty index which needs to fall? We don't have this answers right now, but definitely, I'll try to run you through some of the important data points that I'm watching out for. uh, so, first thing, as I had mentioned to y'all yesterday also, that for the extreme short term setups, I try to look at, these indicators. And over here, you can see yesterday there was around 5 lakh, this is in crores basically. So, 5 lakh crore, call open interest was there. Typically, when this happens, it leads to a very, very short term or an immediate, bounce, you can say. Then apart from that, if you see, swing indicator also went to the oversold zone, and now today, even the average swing is going to an oversold zone. So over here, while these three indicators are now, kind of indicating that a bit of an extreme zone has been reached, what we would need is a confirmation or a turnaround in the Nifty index. And for that, basically, as I was mentioning, the channel and the hourly averages, these are two critical resistance level that needs to break on the upside. So one is this, and if we draw a channel from the top, right, these are the two things now which are very important levels on the upside that needs to be crossed. I think once that happens, then we can say that the short term correction is done. Else the risk will be that we might end up seeing a pullback till this and then again correct. either to the averages or to the upper end of the channel, and then we correct. So that is the risk that is there right now. So need to see, I mean, how things unfold. And now the other thing also, if you mention, the other thing also is that if we see the mid cap index, right, that also today went back to the averages and then it corrected. If you see small cap, again a similar story, went back to the averages and then corrected. I think micro cap has, okay, this is the code for that. Again, over there, it closed slightly above 40, but from there it has seen a correction. So basically, this is the risk right now, that the Nifty index needs to break and sustain above the hourly averages, and then depending on what index we are seeing, those trend lines will be important to break on the upside. Otherwise, there is a risk of the pullback getting sold. Just to emphasize how important this averages are. I mean, again, this is not a recommendation, but just telling you. You can see Keynes India yesterday, it was 13% up, right? But if you see the hourly chart, what happened? It almost went back to the 40R, and from there it corrected. So this is the importance of averages, especially when something is trending, on either side. I mean, it is strongly trending, then averages work like magic. Okay. And at this point of time, small and mid caps, in fact, small and micro caps are the one which are trending, I mean, which are seeing a meaningful trend, so that's why it is likely to face resistance around the averages, and it needs to break above this averages to get some confidence that, now this correction or pullback or whatever you call it, the larger decline that we have seen in the recent past, that is completing and we are headed higher. Okay. So this is there. Apart from that, now, as I told you, I mean, in this sentiment indicators we are seeing this. Apart from that, the other thing is that if you go to the options, so if you see the open interest today, okay, so this is what I was checking just a while back. So while there have been meaningful call additions that have happened, but there have been meaningful put options also that have been added, and in fact that has not been covered yet. Okay, so that kind of tells you that even the bulls are trying to kind of think that this is an important level that will not breach on the downside. So if you see in overall open interest terms, okay, so 25,800 still has a significant open interest, and in fact 26,000 has still a significant open interest. We haven't seen unwinding yet, despite Nifty index, Nifty futures trading below that. Okay, so if you see the Nifty futures rate, it is basically 25,857. Okay, so despite that, we are seeing that 26,000 call, I mean, put short guys, they are still holding firm. And the other thing is that if you see the OIPCR, okay, if you see the OIPCR, it is the combined one is now around 0.7, which is again towards the lower end of the range. So all these things is kind of hinting, and also remember that I had spoken about the gap zone yesterday. Wait, yeah, this was the gap zone that I was talking about yesterday. Okay, basically this is also holding so far. So my guess would be that maybe, I don't know, whatever correction consolidation it does over here, maybe we might see some attempt of a recovery today. And yes, of course, I mean, needless to say that today this Fed event was there, and I'm not sure, I mean, I'm a little puzzled that before going into an event, and despite trend not being in the favors of the bulls, there has still been shorting at 26,005, I mean 26,000 put, 29 25,900 put, 25,800 put, and so on. So I'm not sure if they are anticipating some bullish outcome after that. Out of that, I don't know. Even the trade deal talks are going on, so I'm not sure if insiders are well aware about that. And the other thing is that also why I am still not very much concerned is because despite the correction and all that we are seeing, India VIX is still at the lower levels. I mean, we are not seeing any spike as such, for us to worry that people are participants are afraid, and the volatility is gonna rise. I mean, that is also not the case right now. So that is where we are. But yes, definitely in terms of sectors, I mean, it is not looking good so far. I mean, even the one which were resilient, which is say PSU, now it is trading below the 40-day exponential average. And even here, if you see on a weekly chart, there is a bearish crossover. Then I think now, if this, sorry, this is the normal PSU index. If you see the PSU bank index, which had been an outperformer over here, also, the momentum seems to be turning. Now, of course, I mean, there is quite some room left, but I think on the daily chart, yeah, it is just flirting around the 40-day exponential average. So if this breaks on the downside, then there can be certainly some risk over here. So this has been an outperformer. Metal had also been an outperformer, but it is kind of consolidating over here. So when I look at the indices as such, apart from Nifty IT, okay, so even Nifty IT has seen some correction in the past 2-3 days. But if you see the larger picture over there, that still looks okay. But yes, I mean, the sectors kind of are not showing strength. It is basically ICICI, HDFC, Reliance, which are trying to hold back a bit, and that is keeping the Nifty afloat. But apart from that, if I mean, we are not seeing any major strength in the sectors. In fact, there are some which is kind of breaking down as well. So at such points, typically looking at RRG makes a lot of sense, because it sort of gives you a lead indicator when things might turn around. Okay, so if you see for the weekly, okay, so basically from a medium term perspective, many of the indices are now showing a dip in momentum, right? After continuous gaining relative strength and momentum for quite some time, right? So it is private bank, financial service, all of them seems to be turning around a bit, infrastructure turning around a bit. So I think in on the upside is it is mainly pharma, that also, I mean, just minor uptick, and it is IT, which seems to be, I mean, doing okay. But apart from that, at this point, it doesn't seem like any one of them are seeing very, very constructive. And I think in such cases, and especially, many of the people who might have traded recently would know that index seems to be chugging along well, but that is not the case with stocks. I think in such periods where there are such big divergence, it is better to stick with index. Maybe it might not end up giving that wild moves, but nevertheless, at least it will help you protect some of the money if you trade within the index. I think in index it is pretty much clear right now. I mean, I feel that we are somewhere near the support level. Okay, the only problem is that we are not getting any reversal signs. And I think if this gap zone, I mean, this gap zone is like an ultimate support level. Okay, I think if this is broken decisively on a closing basis, then I think all the bets would be off. And then, I mean, all the bets for the bullish trades will be off. And then maybe, I just need to recheck how everything else is playing out. But at this point of time, it is purely looking at those sentiment indicators. The within sentiment, precisely the short term sentiment indicators, which are probably towards this oversold zone. So this, if you see, is probably towards the oversold zone. So this is where I'm anticipating that there can be some pullback. So yeah, I mean, apart from that, as I mentioned, if you check from yesterday, not much has changed. I think we might come to a better conclusion if at all. Say, for example, if a bounce occurs from here, then we will be able to talk of something else. Like whether are we gonna break out or are we gonna go down from here. So that is where the talking point is. But right now I feel, just like looking at the data, that some bit of pullback should come by in the near term. And once that happens, maybe either side we end up getting some opportunity, is how I'm thinking about it right now. Okay. So I think, as I told you, I mean, today I don't have much to talk about because not much has changed. So in case if you'll have any questions, I'll be happy to address it. I mean, if you all have any conceptual issue, or I mean, in understanding any of the indicators that how we look at, I'll be more than happy to clarify them. But yeah, definitely Nifty is at an important point. I mean, that too at the point where we have a Fed meet and then all the trade talks are going on. So let's see, I mean, how this thing resolve. Any questions, please let me know. I'll wait for a couple of minutes. I mean, if there are no questions, then probably I'll have to end this session, because today even I'm not having much to talk about. Any questions regarding what we have spoken, then please let me know. I'll, I'll wait for a minute further. I mean, if you'll have any questions, if not, then can probably end the session. Okay, I think there are no questions. So yeah, fine. I think with those thoughts, we'll end the session today. Just to recap, basically, today I think there is a Fed meet, and in fact, even the trade talks are going. And amidst that, the Nifty index is at an important support zone. So yesterday, what we had spoke about, like 25,700 to 25,800, that is like an important support zone where the Nifty index is currently. And if you see the options data as well, as I mentioned right at the start, that they are not ready to budge right now. In fact, they are still holding those short positions in the put. So I mean, we are not seeing any unwinding. And the second thing is that VIX is also not shooting up or something, or showing signs of panic. So as of now, all looks good. I think if 25,700 starts breaking on the downside on the spot level, then there is a case of some trouble possibly happening. So these are the broadly thoughts that I have at this point of time. But there is one question I've got from Ishan: for RRG weekly time frame, what should be the holding period? So for a weekly time frame, you could not be. I mean, you should not be ideally doing swing trading. For swing trading, basically daily RRG is good, because that I mean, the dots which are there, and the movement that happens in a cycle, that usually takes around, I think, uh, you can say 3 to 4 weeks in daily RRG. Okay. So if you want to do swing trading, by swing trading, I would imagine that you want to do a bit of a positional trade, right? So for that, daily will work. But if you have a very short time horizon, probably say from 1 week to 2 week kind of perspective, then 60-minute RRG is what is recommended. But again, please keep in mind, the lower time frame you go, the more noise is going to increase. And also, I've clarified this in the past as well, that outperformer or leading in RRG does not necessarily mean positive gains. It means outperformer, which means that if Nifty index is going to fall 10%, maybe those stocks can fall either 2, 3, 4%. It is broadly going to outperform the benchmark index, is what leading and weakening means, because over there the RS is greater than 100. So this is something that you need to keep in mind. There is one more question for some. Can you share some links for the videos traders can take for short term swing? Yeah, so basically all of this thing, let me just share my screen. So this, we have created, see, whatever unique things that we have on Strike, how to use them, we have already created these videos. Okay, so to get those videos, go to help option. Over there, you will see best features of Strike and all the, possible videos which we thought that, you all might want. We have given an explanation over there. Apart from that, if you all still have any issue, go to YouTube, go to strike_IC. Okay, go to strike_IC. Oh, sorry, strike_IC is our Twitter handle, but you can go to Strike Money, and over here you have the playlist which is there, or you can search anything. Say, for example, you want to know more about RRG, you can type over here RRG webinar. Okay, and you will end up seeing all the important webinars that we have done on RRG. So please, I mean, if you all have any difficulty in understanding in any of the topics, say for example sentiment indicator, so we had done a lot of webinars in the past. You can just type sentiment indicator webinar, and you will be able to see all the webinars that we have done on sentiment indicators. So I think firstly I would recommend that just go to these videos, because these are, kind of, you can say, the crash course type or whatever. I mean, these are the smaller form videos. If you want to know something in detail, then go over here and type all the webinars, because in all these key features that we have also done webinars, which we have done it in length, probably 1 hour, 1.5 hour. There have been significant Q&As also which have been asked, so all those have been covered over here. Okay, so that should be helpful to you, I would guess. So which video to see, if your question is that, it totally depends on what time frame that you are looking at. If you have a shorter time frame, and if you want to deal with options, it is basically the Strike UI. Inside that, you need to see. Apart from that, the sentiment indicators, go to the initial part where short term indicators are discussed. Maybe you can look at that. And the other thing is RMI that you can look at. I mean, if you're a shorter time frame trader, then you use daily RMI. Other than that, you can use weekly and monthly RMI for medium to long term. Okay, so based on whatever time frames you have, there are different strategies that we have put out. You can have a look at them, and you know I mean, after looking at that, if you'll have any difficulties, I'll be more than happy to clear out all your doubts. But I think those videos and webinars that we have done, I think you should be in a good position to understand those concepts. But as I mentioned, if you all still have any issues, please let me know. I'll be happy to clarify it. Okay, so yes, I think we'll wind up the session for today, and let's meet tomorrow at 5 a.m. and see if we end up getting some critical level breaking on the upside or on the downside. So let's catch up tomorrow. Thanks.